Thank you, Madam Chairman. And thank the witnesses for being here. You know, it's interesting. I've been a congressman now for 10 months, and I sometimes wonder why the federal government does some of these things and the IRS gets involved. And as I listen to all of you, I tried to break this down into three pieces. There's a cost to report, there's a potential loss of deposits, and there's a potential increase in tax revenues, is what I'm hearing from one of the witnesses. Let's talk about the cost to report. Mr. Schweibel, can you tell me, I mean, you're already printing up 1099s for all your other customers. There's probably not that much of a cost to report these additional taxpayers.
Well, as a matter of fact, there is. We're going through the process of reviewing the requirements that by having to submit specific new forms. We do a 1042-S form, which is a standard IRS form. They'll be required for reporting individuals as well that are these NRAs. If you look at a bank like ours, and we look at the volume of deposits that we have, and we're talking about individual accounts, personal accounts. In our foreign deposit base, it's about 95% of those foreign deposits are personal accounts. You know, Ms. Wilkins was saying that they're not really individuals that are being affected. In our particular case, if you took my foreign deposit base, 95% of that would be almost $2.2 billion in foreign deposits that in turn I would have to generate new reports to IRS by submitting the 1042Ss that we currently have not been doing.
It's not a real big, I mean, it's a change in a computer program and probably
it's not just flicking the switch. It's a matter of collecting the data because we don't, and I'll tell you that we submit our reports to Treasury, to the Federal Reserve, and we do not distinguish in our reports whether they're personal or business accounts. The requirement for the BL1 report that's submitted is very clear. It's just a total number of accounts.
Mr. Caldwell, Mrs. Wilkins states that there is no foundation to the argument that billions of dollars of deposits will leave the U.S. if these rules take effect. The regulation only applies to accounts owned by non-resident alien individuals. You had a summary, I think, in your testimony. Do you agree with that statement?
No, I don't agree with that statement. Obviously, the rule has not been in effect, so we don't know what the effect will be. So what you're doing is analyzing the risk of that happening. And as a regulator, I ask myself the question, what do you think is likely to occur? First, I asked banks individually and anecdotally what they were hearing from their customers, and what they were hearing from their customers were, a number of them is, yes, we will pull our money out. And markets work. We find instances where countries which don't do this kind of reporting are now soliciting these accounts on the grounds that the information will be reported. So the best information we have is that that is likely to have some portion pulled. Is it going to be all of it? Absolutely not. I've used fairly conservative numbers like 20 or 30% to try to assess the harm that we have. What concerns me the most is unless there is a really good reason to put this rule in place, why would you take the risk of losing the money? Because once it is gone, it is gone. And this is once it leaves this country, if that's the result, we're not going to see it back here again. And so unless you could convince me as a regulator that it is really important that we risk losing these deposits, I'd say let's not take the risk.
Thank you. You led right into my next question because I was going to ask Mrs. Wilkins that question. Are you, first off, if you've made a couple bold statements here about taxation and tax cheats and how much money the United States government's losing. This is a cost to the United States government to start doing some of this. They're going further in reach. So what is the return to the Federal Government? Do you have any studies on that? And what is the risk of losing potential dollars? I know the risk is the loss of liquidity in the banks. Are you saying that that's okay? That you're not as concerned with that because there's this amount of tax revenue that the IRS is going to be able to collect because of having other countries now report that income?
I think there are two answers to the flight issue. I think the risk of a lot of capital leaving is small, but I think whatever does.
But you don't know that for sure.
I don't, and I have to say neither do they. But I also think that it's going to come right back to the U.S. through the through the depository accounts of Cayman Island banks, Bermuda banks, Bahama banks. Right now, the biggest liability that U.S. banks have to foreigners is to banks in the Cayman Islands. I think
I want to, my time is almost, I guess, look, it's already out, but the question really is, do you have any studies that show how much the government, the IRS is going to be able to find in new tax revenue by taking the expense of doing this?
No, like Mr. Cardwell said, we don't know what the effects of these regulations are going to be. And the revenue increase to the U.S. in the short term is probably not big. But I think in the long term, as governments continue to cooperate on tax matters, I think tax revenues for countries all over the world will go up.
So the revenue's not big, but the risk of cash leaving is a potential. Thank you.
Thank you. Mr. Hinojosa for 5 minutes.